I'm Mark Crumpton. You're watching Bloomberg Technology. Here's a check of First Word News. John Dowd, President Trump's lead lawyer in the Russia investigation, has resigned. In an email to the Associated Press, Dowd says he, quote, loves the president and wishes him well. The move comes several days after the president added a new lawyer to his team. Dowd reportedly clashed with Mr. Trump over legal strategy. Democrats on the House Judiciary Committee are warning the president, do not shut down the special counsel investigation into Russian meddling in the 2016 election.
Let us set aside for a moment that so much of what the president says is simply factually incorrect. These tantrums are more than merely the online musings of a passionate viewer of Fox News. These statements are threats from the President of the United States against our rule of law.
The House has passed a $1.3 trillion spending bill that would avert a government shutdown and increase funding for the military, border security, and other domestic programs. The compromise measure has been sent to the Senate, which is expected to act tomorrow. Outgoing Secretary of State Rex Tillerson said goodbye to department employees today. He lamented what he called the mean-spirited nature of Washington, but he told them again, quoting, "You don't have to choose to participate in that." I'm Mark Crumpton in New York. This is Bloomberg. Bloomberg Technology is next.
I'm Emily Chang, and this is Bloomberg Technology from Los Angeles. Coming up, stocks drop the most in 6 weeks after President Trump takes his biggest shot yet at China. We zero in on the markets and the trade war brewing between the world's two biggest economies. Plus, Mark Zuckerberg broke his silence, but did Wednesday's mea culpa go far enough? Our continuing coverage of the Cambridge Analytica data debacle and Zuckerberg's potential testimony on Capitol Hill. And the increasing scrutiny on autonomous driving technology in the wake of the fatal crash in Arizona. We will get perspective on the road ahead for driverless cars from Loop Ventures' Gene Munster. But we want to start with some quick breaking news on Dropbox, the company pricing its IPO at $21 a share. This is above the expected range. Trading begins tomorrow on the NASDAQ. We will be there live with our very own Alex Barinka. Alex will also be joining us a little bit later in the show to talk about what to expect. But first, I want to talk about the massive market sell-off we saw in Thursday trading. President Trump has talked about getting tough on China, both as a candidate and now as a commander-in-chief. And on Thursday, he took his boldest step to penalize China, ordering sweeping tariffs on at least $50 billion in Chinese imports. The president highlighted intellectual property theft as a major sticking point, claiming it impacts hundreds of billions of dollars a year. And the markets reacted strongly, stocks falling the most in 6 weeks, with both the Dow and the S&P down 2.5% on the day. The Dow falling over 700 points. Romain Bostic, editor of Bloomberg's Top Live blog, has been covering this big story all day. He joins us now. Also with us, Bloomberg Gadfly columnist Tim Culpin. Normally he's based in Taipei, but he's joining us now from San Francisco. But Romain, I want to start with you, walking us through the day. Obviously, trade and tech, the big stories of the day. Talk to us about the sell-off here.
Yeah, it was a big day that dominated the market, and you saw we were weak all day, but really you look at what happened as we hit that 3 o'clock hour here out on the East Coast. I mean, all of the sell orders just started to pile up in this market. No one was buying the dip. No one wanted to be holding the bag heading into tomorrow. You saw the S&P, Dow having some of their worst days that we've seen basically since the February panic. Every sector was down. All 30 stocks in the Dow Jones Industrial Average finished lower. 10 of the 11 sectors in the S&P finished lower. In fact, the only sector that was up today was actually utilities. The reason there was primarily because it was one of the few safe havens that people saw that they can move into. We also saw a lot of other flight into safe havens, including treasuries, including the yen, including the Swiss franc. A lot of people are also taking concern about some of the technical levels of where we're hitting today. I mean, if you take a look at where the S&P 500 traded today, we were well below that 50-day moving average headed into today, but then we broke below that 100-day moving average, which a lot of people see as an indicator of sort of the strength or the weakness in that market. Remember, we hit that level a few weeks ago. We bounced off it and we rallied. That was back last month. We didn't do that today. We hit that level and we broke right below it. And there's some concern that could mean that more losses are to come. And of course, a lot of that's going to depend on what we see out of the tech sector. Of course, the NASDAQ having an awful day. NASDAQ 100 down for the 7th time in the last 8 sessions, headed for its worst week now since that February panic. We don't have a lot of catalysts coming into this market. We've got Dropbox IPO tomorrow that could provide a little bit of boost. But keep in mind, all of the things that were leading this market, the FANG adjacent stocks, the semiconductors, Philadelphia Semiconductor, every stock in that index was down today. And even after hours here, we're not really getting a lot of help from Micron. This is the moment that we're in now for this market, where tech, which has shown such great leadership, now is sort of holding us back a little bit. Basically, when you see tech pressured, you're going to see the broader market pressured as well.
Now, Tim, there's still some unknown information here. Big U.S. companies like Apple and Amazon, for example, manufacture products in China. How is tech likely to be impacted by these tariffs?
Well, what's interesting is if you think of the major areas that Donald Trump was talking about, essentially metals and so forth, metals and minerals only account for less than 7% of US imports from overseas. So it's actually not a very, very big area. The largest area is electrical machinery, and that's a very broad term that includes everything from mobile phones to microwaves to electric motors. So it's very broad, but that is a much larger area of imports. But then you look at the tech sector in the US. I mean, the largest company is Apple, and of course that's a hardware maker. Then we've got Amazon and Facebook and Google and all those other companies, Microsoft. They don't really do much hardware. And so these are companies that if you put up barriers, tariffs, I mean, who are you looking at there? Because, the Chinese, they make a lot of electronics products. Of course, the iPhone and pretty much every smartphone in the world, apart from those made by Koreans, is made in China. Most computers are made in China, often by US brands. So, when Donald Trump talks about putting on tariffs and he talks about protecting the United States, what is the objective here? It's not very, very clear. He seems to be lashing out, and of course steel is a great area because you can talk about American workers and all the steel jobs lost. But, in the tech sector, most of US tech is actually not hardware anymore.
Now, Romain, walk us through what exactly is happening with tech stocks, what relates to tariffs and what relates to specifically what's going on right now with Facebook and the Cambridge Analytica controversy.
Yeah, well, you've got 2 big issues here. There's this issue about the fact that tech was sort of this leader, and most of the profits that folks have seen this year in the market have largely been in that large cap tech space and in that semiconductor space. So when you get this sort of crowded trade where everyone's sort of benefiting on the way up, as soon as there is a negative catalyst, everyone's going to rush out the door. That's what you saw with the Facebook when the Facebook allegations came to light last week and spilled over into this week. You're also seeing it to a smaller extent with trade. There is a bigger issue here, though, about just the general idea of how much people trust this market right now. We went through this period in this market where everyone was buying on any small bit of news that they could hold on to. Now we're seeing the exact opposite of that. Any reason people have to sell, they're selling. The Facebook matter has raised a lot of questions about the viability of the business model. We're still a long way from knowing exactly how that's going to shake out, but not a lot of people trust the process right now to wait and see what's going to happen. You're seeing the same issue on trade. People just really aren't trusting in the process of what's going on out of Washington, and they just don't want to wait around and see.
We're definitely going to talk a little bit more later in the show about how Facebook's business model could potentially evolve as a result of this. Tim, how is China specifically likely to respond to these tariffs?
Well, what's interesting, I think, is beyond the tariffs. The thing about tariffs, when Trump comes out and makes a big statement, or any US leader comes out and makes a big statement, what you're doing is you're giving fodder to the Chinese to react. If the US doesn't do anything or doesn't say anything or put anything in writing, then it's much more difficult for the Chinese to react. But when you're putting something concrete down, concrete measures such as tariffs, then the Chinese can turn around and say, hey, you're starting a trade war, you're doing this, you're doing that. And one issue that came out of the news today is beyond the tariffs, Trump has told the Treasury Secretary to look into finding ways to restrict investment into the United States by Chinese companies in order to protect technology. Now, this has been an ongoing theme for many, many years, even before the Trump administration, the Obama administration, even the Bush administration before that. This has been a big concern. But this has been handled by CFIUS. You know, the Committee on Foreign Investment in the US works behind closed doors, chaired by the Treasury Secretary, and when they come out with a pronouncement or they knock back a deal, they don't have to tell anybody why. They simply recommend to the president, and the president would go through with it. But if they come out and put down in writing the rules of, you know, what can and can't be invested by Chinese into the US, then suddenly you've put down in writing concrete steps that the Chinese can then react against. And they can hold out that piece of paper and say, hey, you said that we can't do this. Well, we're not going to allow you to do that. So the fact that CFIUS works behind closed doors, I mean, we're all for pro-open government, but the fact that it works behind closed doors does give the US a certain amount of cover to say, well, we're not going to tell you exactly why a deal was knocked back. But if you put it down in writing, then you're giving ammunition to the Chinese.
All right, Bloomberg's Tim Culpin in San Francisco, Romaine Bostick in New York. I know there's a notion, Romaine, that this tech sell-off is just getting started. I know you will keep us posted. All right, coming up, we focus in on one of the bigger tech stocks to tumble this week, and that, of course, is Facebook, as it responds to what may be its biggest crisis to date. But as public opinion sours on the social network, what can really be done? We will hear from a former Facebook executive next. And if you like Bloomberg News, check us out on the radio. You can listen on the Bloomberg Radio app, Bloomberg.com, and in the U.S. on SiriusXM. This is Bloomberg. Facebook remains embroiled in perhaps its biggest controversy to date. The fallout continues in the wake of the exploitation of data on millions of Facebook users by the political consulting firm Cambridge Analytica, which has ties to President Trump. Shares getting hammered this week and leading the larger slump in tech. Facebook CEO Mark Zuckerberg broke his silence on the crisis with a mea culpa on CNN on Wednesday.
This was a major breach of trust, and I'm really sorry that this happened. We have a basic responsibility to protect people's data. And if we can't do that, then we don't deserve to have the opportunity to serve people.
Zuckerberg pledged to investigate whether Cambridge Analytica still has the information it obtained from a third-party app developer and promised to broaden the probe to other developers that may have run afoul of Facebook's rules. Still, these pledges weren't enough for some. And on Thursday, Zuckerberg was called to appear before a House panel saying Zuckerberg is, quote, the right witness to provide answers to the American people. Mike Hoflinger is the former head of global business marketing at Facebook and the author of Becoming Facebook, the 10 challenges that define the company that's disrupting the world. He joins us now from San Francisco. I think we can safely say this is the 11th challenge that will certainly define the company, Mike. Just how damaging. Let's not talk about the business yet, but let's talk about the company as a whole. How damaging is this to user trust?
No, you're right. Of course, it's not the first giant challenge that they've had. I mean, we'll look back maybe even to the dawn of Newsfeed itself, or the 2007 release of Beacon, or the 2009 adjustment to the privacy controls. I think we have a very, very unique situation here simply because of the scale at which Facebook is now operating and the relevance that it has in all of our lives. I think we saw Mark say exactly the right thing yesterday, that this is, of course, all about trust. When you get into a situation like this as a leader, you have to remember that it is about trust and heart and communicating in that way, as opposed to communicating logistics and brain. And I think we've seen even giant technology leaders like Andy Grove struggle with rationalizing their way through the Pentium processor crisis maybe in the 90s, or even Steve Jobs trying to rationalize away the iPhone antenna gate back in the 2000s. The time is now for him to show, just how committed he is to these expectations that we've made very clear to him.
You've seen Facebook weather many other crises. Do you think, though, that this time public trust in Facebook is fundamentally damaged?
I think it is, and I think it probably comes on the back of a 15-month arc where we began to wonder a little bit how we feel about newsfeed, where we began to wonder whether we were potentially being manipulated either organically or through paid means. And we're now, of course, in the last week, we've become very cognizant of the fact that our data may be making its way to places that we had never agreed to. And Facebook clearly needs to understand that we don't expect Cambridge Analytica or Alexander Kogan to take care of us. We expect Facebook to take care of us. And I think that is the message that Mark, Cheryl, and others are receiving very clearly now. And just given the scale at which they are impacting our lives in good ways and perhaps some ways that we need to take a harder look at, it is important that they hear that now.
Absolutely. You know, there have been clips circulating of things that Zuckerberg has said over the years. In 2009, he told the BBC Facebook wouldn't ever sell user data, that data belongs to users. Is that a lie, or is that just painfully misleading?
I don't think it's a lie. I think it's important to understand that to the extent Facebook sells anything, it's access to people, to communicate with people, to connect with people. But what they have to do is really take great care of that access. Who are the players that are able to receive that access? Who is given access to people, and what are they able to communicate? And understanding that while he wants to open the world to many, many voices being able to communicate on Facebook, which has been so crucial to the positive changes that they've brought, to 2.25 billion people using it, that they need to really take care of us when it comes to the manipulators that want to enter the system, and to create a system that does not allow them to be a part of it to begin with, and certainly does not allow them to get distribution into the newsfeed that plays such an important role in our lives.
That said, how does Facebook make that decision about who should and shouldn't have access? If in the end it's a judgment call, and obviously we know that there are malicious actors out there that want to break the rules, and then how does that ultimately impact the business if that data is now not available?
Absolutely right. I think there are some things that are incredibly clear. For many, many, many years, Facebook has had to prevent Nazi sympathizer content, for example, from being distributed in Germany. They have had to, of course, keep nudity and other objectionable content off the platform. Those are extremely black and white, very clear issues. When it comes to subtlety, communication, maybe even by smaller voices, you can't just ask yourself, how big is this voice that's speaking, therefore they should have access. The point of Facebook is that so many, many voices around the world can have access. But we began to hear a little bit more from Zuckerberg yesterday, actually, about their ability to use artificial intelligence to interdict what are clearly fake accounts and what are, we're beginning to use this phrase, bad actors. And I think we will see an era now going forward of Mark really beginning to put his finger much harder on the scale of newsfeed, to really throttle and close the aperture on distribution on newsfeed for sources whom we cannot trust clearly, verifiably, and also for sources that we simply may not know a lot about. Because at the end of the day, we need to get back to a newsfeed that we as Facebook users trust, that we as Facebook users enjoy, and that is really much more about the people that we know, the things that are happening in their lives, and much, much less about obscure sources of information that may or may not have our best interests at heart.
Zuckerberg told CNN that he's not sure that tech shouldn't be regulated. He suggested regulations around political advertising. That makes complete sense. But what about regulations on data privacy? Should the United States take a stronger line, much like they have in Europe, and perhaps go even further?
Well, I think you heard Zuckerberg actually say the question isn't so much whether there should be regulation, but what that regulation looks like. I do feel that he was quite open in that way yesterday. That's obviously many, many miles from all of this being decided and implemented. As you mentioned, in Europe, they have already been quite serious about this for some time. This year, they're getting more serious yet. I think what's important to understand is that Zuckerberg will make decisions in the interest of the long arc of the mission that he is out to solve. Many people don't believe that he doesn't have the profit motive in mind. I've seen him act many times in ways that are not primarily about the profit motive. And so he will absolutely sign up to things that will preserve the mission of Facebook to connect people and to build community. And if that includes testifying and if it includes regulation, intelligent regulation, I think he has indicated that he will step up to that bar, and I think he certainly should.
Right. He said he would testify if it was the right thing to do or if he was the right person to testify. We'll see how that pans out. Thanks to Mike Hoflinger, author of Becoming Facebook. All right, coming up, the latest news on Dropbox, pricing its shares above an already increased range. We'll bring you all the details next. This is Bloomberg. Cloud storage provider Dropbox is getting ready for its public offering on Friday. Dropbox raised $756 million in its IPO, according to a person familiar with the matter, pricing its shares above an already increased range. A total of 36 million shares were sold for $21 apiece. Said the person who asked not to be identified because the details are private. Trading begins tomorrow on the NASDAQ. For more, I want to get straight to Bloomberg's Alex Barinka, who covers deals in New York. So, Alex, obviously, demand is strong. What does this price tell us?
It tells us that folks are willing to buy in, and it also tells us that Dropbox is closing the gap on this valuation discrepancy between private and public. It's a thing that a lot of people have been focused on. You'll remember they had a $10 billion private valuation. This gets them to a market cap of $8.2 billion or 9.7 including RSUs, which is a little closer to that $10 billion private value. We'll see what happens when this starts trading tomorrow. And frankly, it's a vote of confidence in a market that hasn't been very favorable for tech stocks. If you did look at the trading today, the NASDAQ 100 was down 2.5%, which is the steepest decline in about 6 weeks. So Dropbox was contesting not only with having to pitch their narrative, but also dealing with convincing themselves that they can rise above the fray of the concerns around Facebook, which has driven this whole sector down, concerns around the tariffs that President Trump laid out today, and potential increase of pace of higher interest rates. So cutting through a lot of noise here seems like a good pricing for Dropbox. And again, we will see what the rest of markets vote in terms of their pricing tomorrow when the share starts trading down at the NASDAQ.
Right, that was my next question. Dropbox is diving right into the middle of this volatility. We know it's been led by Facebook and obviously by what we're seeing going on with trade, but how could that impact the performance tomorrow?
I mean, if folks are chasing growth, then this might be a stock to jump into. It does still seem pretty conservatively valued when you compare it to some of the comparables. I know Dropbox really wants you to people to look at them like at Atlassian, which trades at about 15 times sales. Dropbox is closer to half that at this price. So if folks see this as it has value, then they might kind of rotate into this. But if you look back at the history of first day of trading and IPOs, there is a lot of volume, and typically the price tends to go up on some of these hotter stocks. So We'll look at this and we'll continue watching as it trades as a public company.
All right, our Bloomberg Deals reporter Alex Barinka. We will have full coverage of the Dropbox IPO tomorrow on Bloomberg Television from the NASDAQ. Alex will be there. Coming up, when it comes to cloud computing, Salesforce is already a towering force, and it's looking to cement that stature with its latest acquisition. That is next. This is Bloomberg.
I'm Mark Crumpton. You're watching Bloomberg Technology. Here's a check of First Word News. House Speaker Paul Ryan is distancing himself from President Trump's congratulatory call to Russian President Vladimir Putin.
Vladimir Putin does not respect democracy. He's trying to do everything he can to undermine democracies, not just ours, but all of our allies. I would not have kind words to say if I were speaking to him.
Arriving at an EU summit in Brussels today, British Prime Minister Theresa May called the attack on a former Russian spy and his daughter brazen and reckless.
It's clear that the Russian threat does not respect borders, and indeed the incident in Salisbury was part of a pattern of Russian aggression against Europe and its near neighbours, from the Western Balkans to the Middle East.
French prosecutors have placed former President Nicolas Sarkozy under formal investigation for illegal campaign finance and corruption. The probe is linked to allegations that the late Libyan leader Muammar Gaddafi helped fund Sarkozy's 2007 campaign. Belgium held ceremonies today to mark 2 years since the deadly terror attacks in Brussels. 32 people were killed, another 300 wounded in the attacks at the airport and at the Malbeek metro station. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg. It's just after 5:30 p.m. here in New York, 8:30 Friday morning in Sydney. My colleague Paul Allen has a look at the markets. Paul, good morning.
Morning, Mark. It's going to be a pretty interesting day across the Asia-Pacific to end the week with the announcement of President Trump's $50 billion in tariffs against China and a promise from the Chinese embassy in the US of retaliation. We already have the NZX off by more than 1% after the first 30 minutes of trading. This follows the Dow, the S&P and the Nasdaq all significantly lower. At least it's knocked Facebook off the front pages, but Facebook has slid again with Mark Zuckerberg being summoned by the Congress. Futures here won't surprise you to learn that ASX futures are weaker by 1.5%. We've got Nikkei futures traded out of Chicago also weaker. Do not be fooled by the Aussie dollar reading green there. It has slid below 77 cents. The yen, the only gainer against the resurgent US dollar. Take a look at commodities quickly. We do have gold up more than 1% over the past few days, even though it's eased a little since then. Crude still showing some buoyancy above $64 a barrel, while the iron ore price weakening on this concern of a trade war with China. Also out later today, Japan CPI for February, expecting a modest rise there to 1.5%. I'm Paul Allen in Sydney. More from Bloomberg Technology next.
This is Bloomberg Technology. I'm Emily Chang. Let's return to our top story. U.S. stocks posting dramatic losses in Thursday's session as fears grow of an escalating trade war between the U.S. and China. Tech stocks not immune to the sell-off. Our Bloomberg News stocks reporter Abigail Doolittle joins us with more from New York. So, Abigail, we know Facebook, we know trade. Dig a little deeper for us on what drove the negative sentiment here.
Emily, I feel as though I say this often when we speak, but another extraordinary day for the equity markets here in the U.S. And I say that because the major averages opened lower, big declines on trade war fears, on the news that President Trump was likely to put into place those $50 billion worth of tariffs to China. And we traded lower in mid-morning. And then another piece of the uncertainty, the D.C. drama. Of course, John Dowd, Trump's top lawyer ahead of, the special counsel investigation, resigning, really throwing markets into a bit of a tailspin. And then when President Trump actually signed those tariffs, a little bit of a relief and then a sell-off. So that really speaks to the level of uncertainty that we're seeing on the day, on the week, and on the year. At this point, the Dow is actually down more than 2% on the year. So investors are really grappling with all of these issues. Plus, behind all of this, the Fed. Yesterday, the Fed did raise rates. They also reinforced the idea that there will be 3 rate hikes this year, and then the path will steepen for 2019 and 2020. So that's another macro backdrop that investors are trying to contend with. But just lots of uncertainty, Emily. And another factor here is, speaking to this year's volatility, markets are just tightly wound. And so it does not take a lot to set them off. On Monday, of course, we had the Facebook linchpin, and then the Fed, and then today trade. When you put it all together, you have a day like today, the worst day since February 8th for the major averages. And we hop quickly into the Bloomberg and see the damage, the technical damage done to the NASDAQ 100 E-mini futures. You see ahead of this year, this beautiful uptrend with the NASDAQ 100 E-mini futures above that 50-day moving average, telling us the buyers are in control. They have lots of confidence. And then this year's big whipsaws, putting in a new all-time high, unconfirmed by both the Dow and the S&P 500. Some consider that to be bearish, and now back down in this range, back below that 50-day moving average. This chart suggests we could see the NASDAQ 100 E-mini futures go back down to the bottom of this range. If below February's lows, Emily, it would pretty much confirm a bear market for the NASDAQ 100. So perhaps more uncertainty ahead.
So that's the bigger bearish picture. Walk us through the biggest specific movers of the day.
Well, once again, Facebook stole the spotlight. The fallout from Facebook continues. The stock finished down about 2.7% on the day. But on the week right now, Emily, the stock is on pace for its worst week since August of 2012. That was when the company and the stock was having a tough time out of the IPO gate. So investors very bearish on this data crisis, not sure what it's going to mean. Will it mean a big fine for the company? Will it mean regulation? And not only regulation for Facebook, but for big tech overall. Apple, Amazon, Netflix, and Alphabet all lower on the day, selling off on that overhang of uncertainty. And very interesting, Emily, to me at least, is the fact that some of the big Chinese internet companies sold off in a big way too, including Baidu. We also had the shares of Alibaba trading lower, and that could reflect some of the internet fears, but plus the trade war potential. Lots of bearish factors, uncertainty for investors to deal with, Emily.
All right, Abigail Doolittle in New York for us. Thanks for breaking it all down. As always, another extraordinary day. Well, when it comes to building cloud-based customer management tools, Salesforce continues to dominate the market, ahead of Oracle, ahead of SAP. And it is the only large-cap software company with more than 20% sales growth for the last 3 years. This week, Salesforce announced its $6.5 billion deal to buy MuleSoft to help expand its platform-as-a-service portfolio. To tell us more, I'd like to welcome Salesforce President and Chief Product Officer Bret Taylor, who has also served as Facebook's Chief Technology Officer. So, Bret, it is great to have you back. I believe this is the first time you are joining us on television since you sold Quip to Salesforce. So I am curious, after having worked so many years in consumer technology at Facebook, at Google, with Quip, what has the transition to the enterprise been like for you?
It's been really amazing for me, actually, because if you look at the landscape of technology right now, I think it's changing more rapidly today than it has in generations. The World Economic Forum calls it the fourth industrial revolution, but it's not just one change. It's artificial intelligence, the Internet of Things, mobility, this smartwatch, Amazon Alexa. And for a company like a Google or a Facebook where I was previously, we have buildings full of engineers to sort of grapple with those changes. But if you're a 100-year-old insurance company or healthcare company trying to figure out how do I provide a customer experience in the face of all this change, it's really challenging to do. And fundamentally, that's our mission at Salesforce, is helping every company in the world grapple with these technological changes and transform their customer experiences. And it's really rewarding as a product developer to empower so many companies to do that.
Now, this announcement that you've agreed to buy MuleSoft for $6.5 billion, what can we read into it? Because it seems to be a desire to stretch beyond Salesforce's core customer relationship management tools.
So if you think about what it means to transform a company that wasn't born in the digital era, this digital transformation, we fundamentally think it starts and ends with the customer, even if that means transforming a bunch of your legacy systems. And the reason why we're so interested in MuleSoft and this concept of sort of integrating all of these legacy systems is it really unlocks the data from legacy systems to enable people to participate in all these amazing new experiences, and we're seeing on our phones and our watches and through customer service experiences that are really transforming business today. So, I do think MuleSoft's platform is amazing because it really enables companies to kind of turbocharge their digital transformation. And for Salesforce specifically, it means that they can transform their customer experiences faster, which is really our mission.
Now, Salesforce has been very acquisitive, including buying your own company, Quip. The deal chatter around Salesforce potentially buying Twitter doesn't ever seem to stop. I know you're intimately familiar with Twitter. You are on the board. Do you see Salesforce making more big deals in the near term?
Fundamentally, we work backwards from what are the technologies that we need to have to enable our customers to achieve their goals. And we always work backwards from the customer and the customer experience. And we'll always consider either building, buying, or partnering to accomplish those goals. And that will continue to be our strategy going forward.
Your current focus is Trailhead X, Salesforce's third annual developer conference. What are the objectives here?
So the really cool thing about Salesforce as a platform is we're not just targeting developers. We're trying to make a platform that enables a much broader range of people to have access to these new technologies. So this event, which is happening in San Francisco next week, the thousands of people who come here, many of them made a mid-career transition into technology, started outside the technology industry and learned for free using our self-learning tools like Trailhead. And by doing so, they were able to actually get a career in technology. What I think is so powerful about that and why this event is so powerful, if you look at the landscape of technology today and all the news stories you were just talking about, the society's relationship with the technology industry has really shifted over the past few years. And what I'm so proud of at Salesforce is we're really doubling down on this platform of enablement and empowerment and trying to create a job creation engine so that not only can we transform our customers' companies, but people can transform their careers through this platform. And I think that's a really empowering message, and that's really what we're trying to get across at Trailhead DX next week.
Now, you worked at Facebook for so many years. You are very close with Mark Zuckerberg and Sheryl Sandberg, and I'm so curious for your thoughts on this Cambridge Analytica scandal. Where did Facebook go wrong? And, what do you make of Zuckerberg and Sandberg's response, which many think was just far too slow?
I think the trend I see is just broadly the technology industry coming to grips with the impact we're having on society. And I brought up that fourth industrial revolution concept from the World Economic Forum. I think that's really apt because it captures how big this is. And as the technology industry is maturing, I think we need to recognize that this isn't just about technology. It's about the impact on our society. And my boss, Mark Benioff, often talks about how important it is that modern companies lead with their values, and particularly lead with the value of trust, and work backwards from that value in every action that you take. And I do think that when I look at the sort of lessons being learned in our industry right now, it's just reinforcing that it's the most important thing in our industry is trust. And it's extremely important that your company is crafted around your values. And I think it's a lesson that we haven't really had to learn to date, just because I don't think the impact of these technologies was honestly completely understood by society. And I think that's what's happening right now, is sort of those two things converging.
Right, but you wonder if they were completely or better understood by Facebook. You have people like Brian Acton, the co-founder of WhatsApp, which Facebook bought for $20 billion, saying to delete Facebook, and other former Facebook insiders, really talking about the potential threats of the social network. Are you in that camp?
I have a great deal of, personal connection and loyalty to that company, so it is obviously sort of uncomfortable for me to talk about. The thing I would say is that I do think that it's the right way to think about it is that these technologies have changed sort of the landscape of our society. Everything from the smartphone to social networks have changed the way we interact with each other. And they're much more than a technology. They actually change our behavior and change our interactions. I think right now, we always like to say at Salesforce that these companies don't exist just to serve stockholders or customers. It's really about all stakeholders, and that includes the communities around us, it includes the government, it includes all of our society. And I think that right now, the way I think about it is, okay, these technologies are complex, their impact is very nuanced. How can we include all the stakeholders in coming up in the way to solve these problems?
All right, Brett Taylor, President and Chief Product Officer at Salesforce. Great to have you back on the show. Thank you. Coming up, the future of self-driving cars is in question after an Uber autonomous car collision. How realistic is the technology? How safe is it? We'll discuss next. This is Bloomberg. It's been a few days since Uber halted its autonomous driving program due to a collision in Tempe, Arizona that killed a woman pedestrian. Footage released on Thursday brought fresh scrutiny to the ride-hailing company's autonomous car technology. The accident is causing people to question whether Self-driving cars are the safest answer for the future of our roads. Companies including Alphabet, GM, Uber, and Tesla are investing billions of dollars to develop the technology. Tests on public roads had mostly proved trouble-free, and the rare major crashes were not found to be the fault of technology. Loop Ventures' Gene Munster says he continues to believe humans shouldn't drive and that traffic and pedestrian fatalities will decline under autonomy. He joins us now. So, Gene, even in light of this tragic accident, why do you still believe in self-driving technology? All right, Gene. I think Gene.
Yeah, I got you.
Gene. Okay, there you are.
Yes.
So you continue to believe that self-driving car technology is the future and that fatalities will decline even in light of this very tragic accident. Why?
Right. Emily, it's going to take, I just want to say big picture, this is going to take longer than people think to get to this self-driving world, but it's going to be a bigger change than people think, too. I look back to pictures of the 1917. That's when horses were at the peak on the roads in New York City, the most number of horses. And when I see a car today, I think of those same horses. That's what you should think of when you see a car out there, is this is going to change dramatically. But I want to get to your question. The reason why I think that this still is going to power forward and that we will see this autonomous future is that ultimately humans are not good drivers. Every year in the U.S., 5,400 people are killed. Pedestrians are killed by cars. Another 1,000 bicyclists are killed by cars. And it just simply, and that rate has been increasing. It increased by 11% last year. That's the biggest increase it's had since they've been keeping records for the past 30 years. And so something is fundamentally wrong with how humans drive. So I just want the big picture to be on the table. And just to talk a little bit about Tempe, is I don't think that this fundamentally changes the trajectory of all those trends we just talked about, is that machines are better drivers than humans.
So you have a new note out about, where specific automakers stand. Talk to us about who's in the lead and Uber specifically, given that they're the ones behind this horrible crash.
So in the lead is Waymo, just because they have the most miles driven. General Motors claims that they're going to have level 5 autonomy, which is no steering wheel in 2019. And so some may say that General Motors is in the lead, but I want to put a little bit of perspective on that prediction from General Motors. Is last week we did a call with an expert who works around these vision technologies that are used in self-driving cars. And when she talked about that prediction from General Motors, and she's based in Detroit, she laughed, and I have a feeling that she is still laughing at that prediction. And so when we think about defining what is in the lead, a simple statement from General Motors isn't necessarily evidence of that lead. But I think that Waymo is, from a technology standpoint, in the lead. I think another company that people are not talking about is what Apple's doing. They surprisingly have the most number of self-driving cars on the road in the state of California, 46. And they also have a bus called PALE, the Palo Alto to Infinite Loop shuttle that they're working on. So the simple answer is it's companies like Waymo, Tesla, Apple, and Uber still is in the lead.
So, how far away then, given what has happened with Uber, from how many years away are we from, being sure that these self-driving cars are actually safe and safer than humans?
It's probably 2025 before we actually see measurable fleets out there. That's how it's going to start, is self-driving cars that have limited speeds and limited areas that they work in. So think of this as, call it 7 years away. As you mentioned, is that Mark Grangard from our Loop Ventures team went through and looked at all the major automotive companies and what their predictions are. Most of them say they're going to have some high level of autonomy between 2019 and 2023. So we think it's beyond that. That will naturally get pushed back. But it is, as we talked about, is inevitable.
All right, Gene Munster, Loop Ventures co-founder. We'll talk again before 2025, I hope. Thank you so much, Gene, for joining us.
Thank you, Emily.
Coming up, we continue our coverage of the stock sell-off with a few charts you don't want to miss. This is Bloomberg. Again, stocks have dropped the most in 6 weeks due to growing concerns of an escalating trade war between the U.S. and China. And tech stocks were definitely feeling the heat, led, of course, by Facebook. Joining us to round out the day that was, Bloomberg's Caroline Hyde in London. So, Caroline, we know there was a sell-off across the board. We know that tech dragged it all down. You know, where are we now?
I mean, quite phenomenal. There goes, in one day alone, $600 billion of market cap from the S&P 500. I've got a nice little technical chart for you, Emily, showing where we are on this S&P 500 and why we might see a bit of a leg lower, particularly as we hit certain technical levels that really aren't a great sign. Have a little type into your Bloomberg G, hashtag BTV5437. You can see in the blue line the 100-day moving average. This is a key support level that you get when you look at these sorts of charts. The S&P 500 currently back below that. The last time we saw it fall there, it was back in February when the concern was interest rates. This time, the concern is, as you say, a trade war and, of course, the tech issues with Facebook. And notably, the S&P 500 is going to feel the effect of the tech sell-off, which itself lost $200 billion in market cap in an industry level. Because, of course, what are the biggest players on the S&P 500? It's the likes of Facebook, of Microsoft, of the likes of Amazon and, of course, Alphabet and Apple, Emily.
So this isn't just happening in the United States. Give us the global picture. What are markets doing around the world?
Yeah, let's put this in perspective, because it's actually not just happening in the United States. Sure, we're hearing the words coming from Donald Trump, but actually tech's been selling off across the board. I take you to another chart in the terminal G, hashtag BTV5523. This one really puts it in perspective, because not only is the US turning lower in a tech perspective, that's in the blue line, but Europe also lower over the past couple of days. We see in fact, I checked it out. Only one single tech stock was in the green in Europe. Every other one was in the red. It was the chip makers in particular that were feeling the heat today. And then in the yellow line, Asia not feeling so pretty either. The fact, of course, Tencent trading lower there as well, Emily.
Okay, Bloomberg's Caroline Hyde wrapping it up for us live in London. Thank you so much, Caroline. That does it for this edition of Bloomberg Technology. A reminder, we're live streaming on Twitter. Tomorrow, we're going to be all over the Dropbox IPO and much, much more. We are live, 5 p.m. in New York, 2 p.m. in San Francisco. That's all for now. This is Bloomberg.